Yo, what's up everyone? Welcome back to Boxmining. My God, has it been a crazy 12 hours. Bitcoin shot up 15% to pass $5,000 in the space of 1 hour. And I was just watching that happen. I was like, wait, why is it 4,500? Wait, 4,800? What, 5,000? That was pretty much my expression going into this whole space. Today, what I'm going to do on this episode is to talk a little bit about trade volumes, about what I think is happening in this space. We're also going to catch up on what's happening on the cryptocurrency news front as well. So it's going to be quite a packed episode, so make sure you stay tuned for the whole entire episode. And as always, everything covered here is my personal opinion, not financial advice. And make sure, guys, you subscribe to this channel if you haven't done so already, and click that little notification bell. So let's get started. So just starting off with everything here, we have basically Bitcoin taking up the whole market up with it. So even after 12 hours, we didn't see a major dump. Whilst what we're going to see right now is Bitcoin sitting happily at 15% up, 15% gains, and other cryptocurrencies like Ethereum, XRP, Litecoin, EOS, everything is in the green. Now, in terms of the reasons why this happened, so a lot of people have been asking, is there a fundamental reason for this? Has, say, maybe the SEC approved ETF approval? Nope, that was an April Fool's joke. Has the major world banks collapsed and everyone flooded to Bitcoin? Nope, not yet. What we do know is that it's really just one giant push. It really happened in the space of an hour. And it's actually interesting if you look at the volumes here as well. Because if you look at the volumes on CoinMarketCap, you really don't see a spike in trade volume when the prices shot up. Whilst what you see is eventual growth of that volume. So this is a very big contrast from Coinbase. So on Coinbase, what we saw is we saw higher prices, and also we saw a huge volume spike as well on the exchange. So this kind of tells me that this is close to where this action happened, because people were really willing to pay very high prices for Bitcoin. Now, what's also interesting is that we saw a decline in trade volume afterwards, which is kind of what you expect. A major buyer, major institution or individual, they buy out Bitcoin, and then everyone else tries to react. Whilst what we see in CoinMarketCap, I would say is a little bit less believable. For CoinMarketCap, the volume increased afterwards. So what does that tell me? It tells me that maybe a lot of these bots that we've been talking about, these bots that trade between themselves, they're also trying to kind of increase their volume, just printing out additional volume to kind of justify and to say, oh, look, we're the best top exchanges. And you can definitely see that as well. If you look at the top kind of exchanges trading here, Fcoin, Transmining, Coinbini, Transmining, they're all printing out additional volumes to kind of justify the price increase. So this lag in trade volume really does show that a lot of this information that's being incorporated into this Bitcoin chart on CoinMarketCap, a lot of that may be just fake volume or bots printing. It's a reactionary response rather than a leading response, a leading indicator. What was also quite interesting that was posted to me was on TradingView. So this guy, Mr. Renev, he kind of accurately predicted that the bear market was over. So this is why everyone's viewing this. But I also have some interesting thoughts about what he posted here. So this is very interesting because at first I thought this was almost like a April Fool's joke, because one bit he wrote, not only it broke resistance, but convincingly went up with higher volume from exchanges that are definitely not wash trading or manipulating markets, such as Fcoin, that have a volume of $5 billion the day the price went up. So he's actually saying here that Fcoin has real volume, when we know that Fcoin is probably the most infamous exchange when it comes to trading bot volume. Now, we also have this thought that we look at exchanges that we're used to, their volumes have all dried up. This is because they have not adapted or getting replaced by revolutionary decentralized trans-fee exchanges such as Coinbini, Fcoin, and many others. So really, no, Fcoin, Coinbini, they're all centralized exchanges. They have a huge motivation for their users to trade via transmining. What that is that every time you trade, you create this new coin, and potentially this coin can sell higher than your trading fees, which incentivizes everyone, especially bots or market makers, to try to trade as much as possible whilst affecting the price as little as possible. That way they can maximize their gains. In fact, they can even open up accounts and trade with themselves, thereby watch trading. So what I do see, and I take this different view here, is that he did spot that the normal exchanges that are regulated, that we're used to, that are known for real volume, they're decreasing in terms of Bitcoin trade volume. This decrease in trade volume is very clear if you look at the one-day chart for Bitcoin to USD on Coinbase. So what you can see is that during the bull market, obviously there's a lot of trade volume, but afterwards, you can see these purple lines here. They mark a decrease of trade volume in Bitcoin over time. And what that tells us is that there's less and less organic interest. What that means is that the people who are here for the wrong reasons, that don't really know what they're doing, they're leaving the space, and that's reflected in this volume. This volume that we see, this decreasing volume, is not seen on CoinMarketCap. Whilst if you actually look at it, if you look at 1 year or 2 year trade volumes on CoinMarketCap, you see an increase in trade volume for Bitcoin, which is kind of interesting. And the only reason I can explain this is by a lot of fake volume that is appearing. And we actually did interview Luke, from one of the co-founders of CoinMarketCap.
What do you guys do about fake volume? Do you think that this is a thing affecting the markets? Do you think this is something you do about it?
Yeah, so this is something we take very seriously, and we're thinking of ways to combat these tensions. I think what's interesting to note here is that some people, given our position, people think that it's our duty to kind of police the industry, right? And I encourage those people to think, about the entirely new subset of criticisms they would have if we were actively policing the industry and saying 30% of your volume is real. That's just crazy. So that said, we take it very seriously, and the way we're thinking about handling these tensions is that bringing more metrics to use so that people can get more a sense of like the bigger picture, right?
And this really ties back into how and why crypto prices go blip up or blip down. It's because the natural organic volume is low, which means that it's very easy to change the prices by just one large amount of capital injection or removal. And that means some people on leverage trading are going to get wrecked. So this is the BitMEX liquidations over the past 6 hours. What you can see is these huge spikes. So unfortunately, if you were betting against Bitcoin with a high margin, yeah, that's going to get liquidated. You're going to lose that money. And we see like pretty much, let's see, 1, 2, 3, 3 big candles of around 100 million. So that's $300 million being liquidated on BitMEX. Yikes. So what are my expectations for the space? So I'm going to quickly bring up the log scale chart from 2014 Bitcoin prices to 2019 right now. And what we can see is that after a major bull cycle, there's always a long-term kind of bearish market. What I can say is that negative bear sentiment, the number of dumpers in the space who are just looking for the opportunity to dump, that seems to be decreasing right now, whilst we do see accumulation over time. So that's why we have this gradual increase of prices without any significant dumps. So I don't think that the prices are going to shoot off to the moon right immediately, going past 50,000 on the way to 100,000 for the price of Bitcoin. But what I do see is that there's going to be accumulation over time for maybe 6 or 1 year even. And overall, I've been really happy. I mean, I've been dollar cost averaging Bitcoin for the past 7 months, been telling you guys that, and also Ethereum as well. So both of them going up, VeChain. And Engine was a crazy bull run that was happening. So been a really great month for me personally here, and I hope it's been pretty good for you as well. Next up, we have like a bunch of IO announcements. What a big surprise that every exchange is announcing their own launchpad and on their own coin. So what we have here is OKEX. They're working with BlockCloud to do an initial exchange offering. We have Matic token on Binance Launchpad. We have Gate.io. They're going to make their own coin called Gate Chain tokens. It kind of reminds me of that initial ICO phase again. I do have an upcoming video on the initial exchange offering and what I think about that and how some certain projects are used. So make sure you subscribe to this channel and stay tuned to this whole kind of IO craze. At the end of the day, it just seems like we learned nothing from the ICO space. Everyone's going crazy, FOMOing back in. And honestly, make sure you guys, regardless of what, make sure you guys do your proper research. Also, this is a little bit interesting. In the coin wars for a stablecoin, Tether has also seen an all-time high for trade volume. So it does seem like people are moving around cryptocurrency assets. Maybe they're going back into crypto. And it's definitely peculiar data that we want to kind of keep in mind, our back of our heads for future reference. This is quite interesting as well. So Tron dapps. We know that a lot of Tron dapps are gambling-based apps. dapps. And one of the interesting arguments here has always been that if it's a decentralized dapp, you can just break all the laws and just gamble all you want. But that's clearly not the case. So Tron dapps are supporting Japanese market restrictions. And the kind of interesting thing here is that to make a long-term sustainable business, and this is something I've learned about this whole space in general, is that if they're businesses, they have leaders that can go to jail. So this just really tells us that decentralization isn't a method to go around breaking laws. That's not what this whole space means. And that's it for today's episode. I've also been trying to plan my trip to Consensus. So if you guys know, Consensus is the biggest cryptocurrency conference. Last year, 250 speakers, 4,000 guest attendance. You can see my video about that there. So my experience of Consensus has always been very interesting. When I got re-entered crypto, I saw a lot of the clips coming out of Consensus. The prices were just going like crazy when people were saying, oh my God, this is what crypto can do. This is the next bull run. And then a year after, when I attended myself personally, I saw the craziness, but we also saw crypto prices go down. And a lot of people are attributing that to just too many people in that space. It was too hard to form a genuine conversation, and it's getting too hot for a lot of people. So this year, definitely, I'm interested in see what the climate is like this year. Is it lower attendance, and who's really attending? Do they really know about crypto? Kind of something that's interesting about the offline space. I've been thinking about this a lot as well, is that the offline space, you get to kind of question people and see how genuine they are about certain projects and what they say. Sometimes online, you can see like a bunch of Ripple comments, XRP army, and we kind of realize that's a bunch of bots. And offline, you don't have the issue. There's no robots in the offline space, or is there? So if you guys are interested in attending, there's a promo code down there for a 15% discount on Consensus tickets. And guys, thank you so much for watching this video. Remember to smash up that like button, click that subscribe button. It's gotta be down there somewhere. See you in the next video.